All right, so today we're taking a deep dive into venture capital. We're going beyond just the basics here, using some insights from Web Wealth Nation to really understand how VCs operate and think. Now, you're already interested in this world, so we're going to zero in on.
It's different from just getting a regular loan, you know? Venture capitalists are forming a real partnership with the startups they support.
Yeah, it's not just about handing over a stack of cash. I've always been curious about how that partnership actually plays out in real life. What's the value they bring beyond just the money itself?
It's like having a coach, but a coach who's financially invested in your success. They've got the experience, the connections, and they can be a real mentor. They've seen companies succeed and they've seen companies fail, so they can help you see challenges coming and guide you through those critical early stages.
That's going to be a huge advantage, especially for someone who's new to the startup world. So how do VCs even find these promising startups in the first place? Are they just like sifting through a ton of pitches?
It's much more active than that. Imagine a world of exclusive industry events, constant networking, and a whole network of trusted sources giving them referrals. It's like they're always on the hunt for the next big thing, actively seeking out the companies that fit their investment strategy.
Okay, so let's say they've spotted a potential investment. What happens next? What does that evaluation process look like?
It's pretty rigorous. They're not just looking for a cool idea. They're trying to figure out if this thing has the potential to grow exponentially. Can it scale? Is the market big enough? What about revenue projections? These are just a few of the things they're looking at.
So it sounds like they're looking way beyond just the surface level. What else are they scrutinizing?
Well, beyond the numbers. It comes down to the team. Do these founders have the experience, the vision, and maybe most importantly, the grit to actually execute their plan? Because VCs understand that a great idea is nothing without the right people behind it.
It's like they're betting on the jockey, not just the horse. That makes sense. You could have the most revolutionary idea in the world, but without the right team, it's going nowhere. Why would a startup even need a VC? When does it actually make sense to go after that kind of investment?
It all depends on the startup's goals
Yeah.
and how quickly they need to scale. Let's say you're building a totally groundbreaking app. You need to move fast, capture market share before anyone else. And to do that, you often need a massive influx of capital. That's where VCs come in. Think of it like rocket fuel for your business.
So in a fast-paced industry like tech, VC funding can be the key to really taking off.
Yeah.
But it's not the only option, right? What are the alternatives if a company doesn't need to grow at that crazy speed?
You're right, VC isn't always the answer. For companies that are growing more slowly, bootstrapping, where you're funding the company yourself, or even traditional loans could be a better fit. It really comes down to your growth strategy and how much capital you need to achieve your goals.
Okay, that makes sense. So let's get back to those key things VCs are looking for. We've talked about scalability and a strong team.
They want to see traction. Early sales, a growing user base, strategic partnership, all those things show that your idea has legs, that it's more than just something on paper. It's about demonstrating real demand for what you're offering.
It's like proving your concept with real-world results. Stepping back for a second, even with the best idea and a rockstar team, VCs are ultimately looking for a return on their investment, right? So how do they plan to get their money back?
That's a key point. VCs are looking for a clear exit strategy, usually an IPO where the company goes public, or an acquisition by a bigger company. That's how they see their returns. And it's important to remember that venture capital is high risk, high reward. They're betting on a few companies to really make it big.
So it's a strategic partnership on both sides. The startup gets the capital and the expertise they need to grow, and the VC is hoping for that eventual big win.
But what about the personal side? What are VCs actually like to work with?
It's interesting. They're not just writing a check and disappearing. They're really involved in the companies they invest in, often taking board seats and providing ongoing advice and guidance. It becomes a true partnership where both sides are committed to the company's success.
That makes sense. Having someone who's been there before can be so valuable, especially in those early stages when you're navigating uncharted territory. What are some of the challenges that can pop up in these VC startup relationships? One challenge can be disagreements about the company's direction. Startups are often driven by the founder's unique vision. While VCs might have different ideas based on their experience and investment goals, navigating those differences and finding common ground is crucial.
I can see how that could create some tension, especially when you have passionate founders who are really invested in their vision. So how do they bridge those gaps and make sure everyone's moving in the same direction?
Open and honest communication is key. Both sides need to be upfront about their expectations, concerns, and goals. VCs need to respect the founder's vision, but they also need to provide guidance based on what they've learned.
It sounds like finding the right VC partner is just as important as getting the funding itself. But how do you know if a particular VC is a good fit for your company? What are some red flags to look out for?
One big red flag is a VC who's only focused on short-term gains and quick exits. You want a partner who's in it for the long haul, Someone who gets your vision and is willing to support you through all the ups and downs of building a company.
So you're really looking for a VC who shares your values and who's truly committed to your long-term success, not just a quick return on their investment.
Exactly. A good VC partner is someone who believes in your vision, who challenges you to think bigger, and who's there to support you every step of the way.
This is all super insightful. We've definitely gone beyond the basic. What are some of the reasons why a larger company might want to acquire a startup?
Usually it comes down to strategy. They might want to move into a new market, get their hands on some valuable technology, or maybe even eliminate a potential competitor.
It's like finding those missing puzzle pieces. But I imagine these exits, whether it's an IPO or acquisition, they're not just simple transactions. What are some of the things that go on behind the scenes to actually make these deals happen?
You're right, it's not just a handshake and a signature. Negotiating an exit is a delicate process. You need skilled negotiators on both sides, people who can really assess the company's value, and you need a good understanding of how the market's playing out.
So beyond the financial side of things, what really makes an exit successful? Is it just about getting the biggest payout possible?
While those financial returns are important, a truly successful exit is about more than just the money. It should align with the company's long-term goals. It should be a win-win for everyone involved. The investors, the founders, the employees, even the customers. It should set everyone up for continued success going forward.
It's about finding that balance, where financial gains work hand in hand with the company's goals and everyone benefits. We've covered so much in this deep dive, from those first steps of getting a startup off the ground to navigating those different paths to an exit. What are your final thoughts on this whole world of venture capital?
It's a fascinating world. High risk, high reward. It's driven by big ideas and a willingness to take risks. But ultimately, it's about supporting those who are brave enough to chase their dreams, the entrepreneurs who are shaping the future.
It's pretty inspiring to see those sparks of creativity grow into something that can change industries, even the world, and makes you wonder, what's next? What are the big ideas, the groundbreaking technologies that are out there just waiting to take off?